Good day. Welcome back to the live trading room. How's everyone doing? Can you guys hear, voice, see, screen? Or she says, glad to see you were able to do it. I told you it would happen. I tell you what I did. I told a few people in the chat yesterday, Orsi. I said I went in. I said, guys, on a little thing they make you fill out. I said I've been bullish the yen since 2021, and they immediately kicked me out. The lawyer said, "Hey, this guy he's got bad judgment. Um, we don't we don't want him in our courtroom. We don't want him in our courtroom." So that got me out. The trading thing. I threw in a no stop loss as well, just just to make sure. But yep, I got out of it, and I still get my $9 check in the mail, my payment for the day. So that was cool. Excited to be out of there. There was a worry that I was going to have to be there for 3 days, which I do not want to be backed up for 3 days of stuff to do. And I don't want to miss you guys. So cool to be back. Voice is better as well. Monday was horrible. Thank you guys for putting up with me in the private Q&A session. Much better today. Taxes, OG. Man, that's how they get you. All right. So let's get started today. We're going to do our trade of the day. TradingView got wonky on me while I was gone. So it's got a white background again. So I've got to redo that. The thing is, when I change the screen, it's going to change my charts up again. I got to go through that whole process. So deal with the white background today. We're going to start with our trade of the day, which is going to be on the pound dollar. If you guys are new on YouTube or TradingView, what we do is we give you kind of a glimpse inside the Tier 1 Trading Live trading room. Lets you join us for our trade of the day. So we do analysis on usually one pair, give you a chance to interact, give you a chance to see how we get down here in the live room, gives you a chance to ask lots of questions as well, which is always good and beneficial for you guys as well. And then we kick you out, and then we kind of do the same thing for another 2 hours or so, along with whatever lessons we have for the day. George said he's currently logged out. So you guys can do your thing. All right, let's what I said we're going to do. Pound dollar today to start. Let's see if this is still relevant. And going a little bit backwards, but the general premise will be there. So pound dollar, if you guys remember, right, we had recently put in, what is this called right here? Who can tell me? And I need to get my notes ready so I can track what we're doing. We have recently put in a new structure low, right? We know that because this was our previous structure low. We have a break and close below that, giving us a new structure low. Now we know by our rules on how to read a price chart, how to identify trend, that when we see a new structure low, when we identify a new structure low, it allows us to make the prediction that price is likely to continue lower. So what we're doing there is we're basically setting up our directional bias based on the information that the chart is giving us. One of the biggest issues that I see with traders is that they don't actually know how to read a price chart, so they don't actually know how to create a directional bias. And because they can't create a directional bias, they have trouble making accurate predictions. And trading is all about making accurate predictions. It's about two things, actually. Peter Brandt said this very nicely. I've been reading the New Market Wizards books, not called New Market Wizards, but the newest one called Unknown Market Wizards. Had a good quote in there about what trading is. Trading is about making an accurate prediction on direction, and it's about timing. So you got to make an accurate prediction on direction, and your timing has to be right. Both need to be correct in order for you to benefit from the trade. If one or the other is wrong, it's usually going to be a little bit tough for you. So we have our directional prediction based off this information, but what do we always need to do when we look at a price chart? Is looking at kind of this zoomed in version of the price chart enough? Or do we need to do the 5 magic words that my mentor taught me, one of my mentors taught me, Todd Brown, that stuck with me forever. Look left, structure leaves clues. And if you remember, we're at an interesting place here on the pound dollar, right? Now, clearly, we're not at previous structure lows, right? The lowest point is right down here near $1.14. But if you guys remember last week, we talked about this inside. We were talking about shorts on pound dollar. And we were looking at this inside level of structure and where this consolidation starts and said this may be a period that we need to pay attention to. We got a little bit of a structure shelf looking left as well. So we actually have this kind of smaller level that we're aware of too. So we're not necessarily, or I'm not necessarily sold on continued longs until we can violate these lows. Because as you can see, we came right to that predictive level, right around $1.20, and then we reacted here. So that's the general premise on my higher time frame. By the way, I put out an interesting poll question this morning. I think I know the answer, but I always like putting it out. It was I said when you do your analysis, do you work from higher to lower time frames, or do you go from lower to higher time frames in your analysis? Now, many of you are going to say higher to lower just because you've trained with us and you're like, well, how can it be any other way? But I suppose there is a group that does lower to higher, and I don't necessarily see a problem with that. It's going to seem weird if you're used to doing the opposite, but I do it a few times when I'm doing the minor pairs and I'm switching really, really quick just to get the pairs that aren't in my portfolio, so I don't care about them as much. I do it a few times there to look for the thing first and then look for the location second. I actually don't see it as being a negative as long as you know what you're doing. I think at the end of the day, with anything you do in trading, as long as you know what you're doing is important. But it'll be interesting to see how that poll plays out. Right now, 76% of the audience say higher to lower, 12% say lower to higher, another 12% say I just stick to a single time frame. But I personally like higher to lower just because of the whole IPDE process: identify, predict, decide, execute. But I don't actually think there's a problem with going the other way around if you kind of are organized with it. So we bounced off this level. We've come back to our previous level of structure. Now we're starting to, consolidate again. And we go down to 4-hour time frame. We have something a little bit interesting here. Can you guys see it? It's a classic chart pattern that played out. Kind of looks like what you may have looked at in the mirror this morning, right? Little head and shoulders action again. And whether you want to call this a head and shoulders or not, it's the same premise, right? It's price coming down, retracement, small extension, deep retracement, failure to extend, and then a violation of that previous retracement here. And a head and shoulders pattern is a classic kind of reversal pattern in the market. So this is interesting. What else is interesting is that we had these probes, right? These 2 probes right here, tweezer bottoms or not tweezer bottoms, depending on how technical you want to get with the naming of things. I don't really care about the naming. I just care about the overall message, but some people are very technical with that. Tweezer bottoms right here. These are these 2 kind of long wicked candles, right? They show us what? Who can tell us? What's the story? If you guys are new, I'm all about stories. I'm all about the candles and the charts and the movement being sentences and words and paragraphs in one book, the book of trading. That was also a working title for one of my books that never got made. It was a book on trading called The Book of Trading, talking about how in trading you read stuff like a book. It was going to be one of those super puns or something like that. It's somewhere in a notebook that will never get published. But yeah, shows us rejection, shows us bullish pressure, buying pressure. Price tried to spike down. He immediately got beat back up. And again, no surprise, this is coming off a high momentum move right there as well. So we may be coming back to retest that level, right? Or we may have this may be the final hold right here. We never know until we know. But if we do retest that level, we've got something else setting up as well. We've got a potential advanced pattern formation, right? We are going to have a very Very, very, very shallow Gartley. I'll draw it on roughly for you, but it's going to be an X to A to B, and it's shallow because the B leg is so shallow. It comes to just to the 618. B to C, and a CD completion, which is going to be right below this 786. So if price action were to make a move down into this area where we've seen the buying pressure exist before, we're also going to have an advanced pattern formation, which if you are an advanced pattern trader, is going to give you an aggressive entry into this trade. If you're looking at the overall premise of this trade as being a reversal, excuse me, coming off the head and shoulders, and potentially us seeing some relief and a move back up to retest the highs here right below 124 and maybe ultimately continue a little higher, then this is going to be a decent setup for you. So I'll leave this on for a little bit. Let me know if you guys, I'll get it into our pro trade log. If you guys have any questions about it, type it in now. I know TradingView and YouTube has a little bit of a delay, so I'll give you guys a little bit of time while I, again, get this into our pro trade log. And then live rumors, if there's a place you want to head to next, let me know. If not, I don't mind choosing. So I'll mute the mic for a little bit. No, I'll leave it on. You just hear my keyboards dabbling. What is this? Pound dollar potential bull Gartley C Wednesday live room. Oops, can't spell. For details. Also got the cap lock on. This is great, Akil. It's like you've never done this before. All the angry yelling emails that I write in the morning. That's why the cap lock is always on. Me responding to those angry emails. All right. Timeline. Let's get this to our pro trade log as well. I don't see any questions coming through, so we'll probably dismiss you guys on the live stream in a little bit. I'll give you guys a few more seconds. Let's see Duncan typing in as well. I dove into some daily chore the other day, Duncan. Last 2 days after Cherry's question on the Q&A. It's the strategy that keeps me coming back for more. Good morning, Mac. Keeps me coming back for more. All right, YouTubers, trading viewers, thank you guys for joining. I'll see you guys tomorrow, right? Today's Wednesday. Yeah, I'll see you guys tomorrow. Same time, same place for our trade of the day. Do me a favor on your way out. Hit that like button. I would very much appreciate it. Again, we're doing these live streams for free. One thing came in, went on a tilt yesterday and lost my challenge. As a result, after months of back testing, preparation, and consistent trading, it's funny how one event can set someone off. Yeah, that's it's funny you mentioned that because there's an old saying. I remember I learned this when I was in stock trading, where it's bulls take the stairs, bears take the window, right? Typically, you look at that in like the stock market, how the stock market moves when it's generally in an uptrend, and it's just a very slow, steady uptrend. And then when you have your quote unquote crashes, boom, the crashes happen really fast. It is the same thing with trading psychology, guys, and it's unfortunate because I've unfortunately seen this. You said it's been for months. I've seen this happen to traders after years, where they go on years of consistent profitability, where they're doing the right thing, slow and steady returns, 3% a month, 5% a month, right? Maybe a big month in there every once in a while. And then it's one thing that sets them off. And it's different for each person. It's one thing that sets them off, and they fall off the wagon. I guess you can say the same thing about like people that have addictions, where you do so well for so long, and then it's one little thing, and then it's like boom, all back to square one. And trading is very similar. So it is never easy dealing with that. I would say this, and this was a question I got the other day. Someone asked me, this was actually a pretty brilliant question. Someone asked me, can you back test trading psychology? What do you guys think about that real quick? Can you backtest trading psychology? I've been coaching for what? How many years have I been coaching for? 2012 I started. So 10 years? 10 years coaching. And I think that is the first I've gotten that question, which is an interesting one. Can you backtest trading psychology? What do you guys think? Can you backtest trading psychology? Bobby says, I think you can try and train it, but nothing's like the real thing. And I don't think you can backtest it, right? And the reason you can't backtest it is this. Um, there will be emotions during your backtesting, right? We all know that if you backtest it, you get emotional, right? When your system performs bad, you start throwing stuff at the wall. When your system performs well, you start dreaming about, man, how quick can I grow this account to $1 million, right? We have those emotions during backtesting, but they're not the same as real money. And for anyone that has ever just backtested or traded demo, and you wonder why people are demo account kings and they suck with real money, it is because there is a massive difference. There's a massive emotional difference when something is actually on the line, and you can't necessarily replicate that, right? It's no different than like practice versus a game. It's no difference between demo versus live trading. It's no different whether it's like you're trying out for a TV show versus you're actually on the TV show. There's nothing that can replicate it. Because that feeling is going to be different, and that feeling is going to be unique. That feeling, the emotional feelings you feel, are also going to be unique based on your situation, right? Let me ask you guys this, right? Have you ever had like a stretch of bad days? And I used to do this in high school a lot because I'm not good at emotions, which is maybe good at trading, but not in other things in life, where I tend to keep everything inside, right? So I tend to keep everything inside, and it compiles. It compiles. It reminds you of the movie Me, Myself, and Irene. I think that's the movie with Jim Carrey. I keep everything inside, and then it'll be one little thing that sets me off, and I explode. Anyone else like that? Where it's like all the frustrations that you have for the week, and then it's one thing like you stub your toe or something stupid, and then you just boom, that's it. That's the trigger, right? That's the same thing in trading, right? If you're having a bad week and you're just on the edge, and you may not even know that you're on the edge, but you may be on the edge, and it's one thing that happens where it's like, yeah, I have a frustrating week. I'm arguing with my significant other, my partner. Job is talking about firing people, and I don't know if I'm on that list or whatnot. Then all of a sudden, you come to a trade. You're in a good trade, and then you get stopped out by 1 pip, and then boom, that's it. That sets you off, and then you go on this emotional tirade, of revenge trading, all this stuff, right? And that could be different. You could have the same exact scenario in trading, but have a great week, and it may not bother you. You may be having a good week. You got some good news. You got a promotion. You get stopped out of a trade by 1 pip. You're like, whatever, it happens. That sucks, right? And then no reaction. But the next week, it could be the exact opposite. So there's no way we can replicate those feelings, because it's more than just what's happening on the chart. It's what's happening in our everyday life, right? This is why we're talking about that self-review every morning. Make sure you're right in the right trading mindset, right? If you had a bad breakup, a bad fight, lack of sleep, cold, allergy attack, right? We want to identify those things before we ever get in the market, because we're kind of cutting off those issues. But we can't do that in backtesting, because backtesting is so different. That trigger is never going to be the same. But what we can do with our emotions is we can track them in live trading. We can track them in live trading. And we should track them in live trading, because what we want to do is we want to figure out not necessarily what emotions we're feeling, but we want to figure out why we're feeling them. What emotion is causing me to make the most of my mistakes? What situation am I coming into the day, right? So when you're journaling and stuff, if you're having a bad week, you should be writing that down. Hey man, yesterday was a rough day, blah, blah, blah. I'm feeling kind of on the edge already. Because now all of a sudden, if you make a mistake later in that day, now you could connect the dots and you know why. It's not just a random mistake where you fall off the wagon. You know that, hey, I came in having a rough day, and then I made this mistake, and that just set everything off. And that way, in the future, Now you're aware. In the future, when you do your pre-market review, your pre-market self-check, I should say, and you write down, hey guy, having a keel, I'm having a bad day today, blah, 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 blah. That allows you to be more aware. You're more alert. You know that, hey, I'm in a situation where there's a much better likelihood of me making a negative emotional decision today. And because you're aware of that situation, you can proceed with caution. And it could be anything from not trading that day. It could be anything to just kind of a simple mindset where you make a mistake and you're like, wait, okay, remember this, don't let this trigger you. Today's one of those days. Today's a red day. Today's a red day. Don't let it trigger you. Right. But at least we can start attacking the problem. Because the thing is, we're gonna have rough days in trading all the time. Right. And in general, in trading, we know that an equity curve, it ebbs and flows. It goes up, it goes down. It goes up and goes down. It extends and retraces, right? The goal in trading is to not let those bad days destroy us. We need to manage those losing days. That is our only goal in trading. The winning days are always going to come for most traders, not everyone. We need to manage those losing days so that a losing day is simply a normal losing day, and it's not something that disrupts and makes up or takes away rather from all those winning days. And we don't ruin a month's worth of trading over a single day. So yeah, interesting concept. And I'm sorry to hear that, man. I would say again, try to think back if it's fresh. It was yesterday. Think back about why you were feeling the way you were feeling. Obviously, write down the mistakes that you made in order to kind of blow everything. And then get in that habit of doing that self checkup and writing down how you feel. And at least, again, it doesn't necessarily mean shutting down your trading for the day. But it just means be alert. Like, hey, this could be a rough day. It's no different than the weatherman saying, hey, it may rain. And, you're packing that umbrella. You may not use it, but you got it just in case. You're just prepared. And that does help. Dwayne says real quick. Hey, Dwayne, he said, if you see trading psychology as a paradigm, your mentality, your approach, your beliefs, your personality, then you would have a better understanding of the market in relation to you. Yeah, it's all about knowing yourself. People think trading is just you against the market. It's not you against the market. It's in fact, it's probably, I guess it is you against the market in a case, but it's more of you against yourself. It's two battles that we have to master. We have to master trading against the market. We have to master trading against ourselves. Both which are extremely hard, and this is why only a small percentage of traders actually make it, and this is why the small percentage of traders that actually make it focus on the same things. It's very interesting, and I'll end this rant here. What's very interesting is this, right? You talk to any successful trader out there, maybe not any, but 90% of successful traders out there. Doesn't matter what market they're trading, doesn't matter what strategy they're trading. If you ask them what the keys to success are, they're going to tell you the same thing. 90%. There's always going to be that 10% out there that are just doing weird stuff and are good doing their weird stuff. And have the wrong idea because they're super cocky and whatnot. But 90% will tell you the same thing. And most of it has nothing to do with their strategy or market. If you ask any real successful trader about their success, most likely their first answer has nothing to do with their strategy. And again, if you guys want to, I would highly recommend, if you haven't done so already, reading all of the Market Wizards books, because you're getting interviews with the best traders of all time. If you can't learn something from the best traders of all time, then I don't know who you can learn from. So good question. All right, guys, I'm going to kick you guys out. I'll see you guys tomorrow, 7:30. If you guys are coming in late, 7:30 a.m. New York time is when we start. Be there or be square. Do people still say that? That sounds really old.